Not just here for Tackle Train, bringing you a market recap for Monday, November 23rd, in what will be a very light, thinly traded week. Welcome to what we call Theta Giving Week. This is a week where, credit traders, covered calls, naked puts, bull puts, bear calls, iron condors. Whereas Gino Poor likes to say, we like to give theta giving, and this is where you try to build up your theta, your positive theta to such a level to where on Thursday when the market's closed and Friday when the market's only open up for a few hours, and then on Saturday and Sunday, you basically have 4 days of market being closed, even though despite it is open up a little bit Friday, you really have kind of 4 days because Friday's very thinly traded, not a lot of price action expected on Friday of this week, and you can capture positive theta for four consecutive days, which obviously we really like. Now, typically what I like to start with in the market recap is basically technical read on the market. And what my read was last week is I expected it to continue to fade up is what I expected to. And as you see, after we got that bullish engulfing candlestick, basically for the last few days, we faded back up into a resistance level right there at around 2100. It didn't necessarily get there. But what I'm kind of seeing right now, and again, it's going to be thinly traded. Any price action we see this week is not going to be a telltale sign to what's going to happen in December, because even the volume today on the S&P. I mean, when we're looking at the ES, look how low of volume. We had less than 1 million contracts being traded out there. That is extremely light volume. And so whatever price action we see this week on the market, don't expect it to do a ton in terms of confidence or lack thereof for coming into the holiday season after December and so on and so forth. But right here, what we're looking at is we're approaching here resistance. I don't anticipating breaking out of the resistance level right here, just because I don't see a lot of economic news or whatnot, or news in general, that really could drive it out there. So my expectation is a little bit of neutrality this week, perhaps even a slightly downward movement in prices. You're starting to see slowing momentum on what was a really, really, really good week in the market last week, bouncing off this support level at 2,000, going up about, close to, 100 points, about 4% gain last week in the marketplace, hitting those resistance levels. Look for that to come down a little bit. On the dollar index, hit that. We've talked about this in the Forex report. That $100 mark, that is going to be a significant price level. And as you can see just today, it got up right above 100, about 106 cents, and started coming right back down, finishing at 99.75. Economically, I see that kind of fading between 99 and 100. If we see a significant breakout of 100, that could change things. But right now, 100 is your resistance level, and somewhere around, I would say 98.50 is right around your support level. So I'm expecting a little bit of a fade in that, just kind of a little bit of neutrality this week in that. We also have crude oil here. Crude oil basing down at the $40 mark, seeing an upward movement in price of 40. 40 is going to be a very important level for it. I got a range between 40 and 44 up there. I don't see it really doing anything this week, just hovering between that 40 and the 44 mark. Naked puts on USO certainly to work there. Gold showing tremendous weakness still. Thought it was going to, maybe perhaps bounce off that, but I'm back to being bearish on the commodities, gold, and do have a price target, not in the short term, but very long term. I've had a price target around $1,000 an ounce, and now we're starting to see that. And I think it's even more significant when you pull it up on the weekly chart, breaking out of these long-term resistant support levels. Look for that to continue to move down, perhaps another into the $1,000 mark. Silver, I still like silver though. It hasn't necessarily broken that support level like gold has. Tested down, came right back up today. I'm a long-term investor in silver, and nothing's really going to stop me from doing it. But if it does break 14, you might want to cover your risk with some put options. And so that's kind of the technical read on the market itself. I do have a slightly negative bearish bias, just slightly though, on the S&P. Slightly bullish on the dollar, neutral on crude this week. Gold, I have a slightly bearish bias, and silver, I have a neutral bias coming into this week in the market. Now, in the news today, there was the market was really kind of boring today. With so little movement in the market and so little volume in the market. But you did have that major mega merger and acquisition between Pfizer and what you're looking at right now, which the market kind of sold the negative news. I mean, we are talking about one of the largest, if not the largest, healthcare merger of all time between Pfizer and AGN, $160 billion merger. Pfizer down, 2.64%. Obviously, the market did not love uh, the uh, the announcement and between Pfizer, and so we're looking at both of those stocks that had kind of had a negative movement today, with Allergan down 3.4%, Pfizer down about 2.6%. I don't see. I'm not investing in either one. It was really just the only thing that kind of drove the market today. From an economic standpoint, this week we had this week in the market. If we look at some of the bigger impacts to the market here, we had existing home sales, which were the lowest since really February. So we had a miss at 5.36 million. It was expected to come in at 5.39. Excuse me. Tomorrow we have preliminary GDP, which is supposed to come in at 2%. Previous was 1.5%. 2%, 1 to 2% is what we call economic stagnation because it's not even covering inflation. I look for that to come in slightly under that is my expectation, but not a lot under that, just slightly under that. Consumer confidence still at highs right here at 99.3 with the expectation. We have durable goods coming in on Wednesday, and then really nothing the rest of the week. And even though the markets open up on Friday, no economic news, very light, thinly traded. So I'm really thinking the market kind of ends on Wednesday of this week. So economically, not a big week, I would say. The GDP number, consumer confidence, durable goods, those certainly can be movers in the market. The last thing I want to look at is, well, two more things I want to look at. One is an IPO that came out just recently, and that was Squarespace. And Squarespace came out on last week, and as you can see, this was on Thursday. The low 9, high 14.78. I never looked to buy on the IPO price. And the reason is, 10 years ago, IPOs were really good. They kind of shot through the moon. But ever since we really had Facebook come out, you've had kind of disappointing news to a certain extent. It's really a crapshoot, 50-50, whether or not it goes up or down. Looking at Squarespace here, obviously had a little bit of a positive move when it came out, a little bit of profit taking sessions the last 2 days, and now you're down around $12. I'd really kind of like to wait about a month before I invest in something like an IPO or start trading an IPO because it's just so, it's unpredictable to a certain extent. Plus, as many of you know, I have a rule. I can't buy anything that I can't protect. And as you can see, Squarespace does not have options listed yet. They will in the future. That should take a few weeks. It just depends when the market starts coming out with them. But at that point, then you'll have enough price action to really kind of justify some type of probability, and you'll be able to trade put options on it if you need to protect the investment to the downside. This today in the market, let's kind of look at leading sectors and whatnot. Let's go to the Trade Center tab at tackletrading.com and click on the heat map here. And as you can see, looking at the heat map, we're looking at today in the market. Base materials had a fairly decent day with Exxon, Chevron, Apache, oil and gas, major energy companies. Those types of companies doing fairly decent today. Not great, but fairly decent. Technology really kind of down a little bit. Nothing too tremendous. Financial down a little bit. Consumer goods, really good sector today, except Apple down 1.3%. And then utilities continues to get beat up today as well. So consumer goods, some of the services sector, basic materials sector, healthcare somewhat fairly good outside of Pfizer and Allergan. And then technology very mixed, slightly bearish, financial on the bearish side as well. That's it for the market recap. This is Matt Justice, and I just want to say happy Thanksgiving to all you tackle trading students and clients out there. Hope you have an absolutely amazing Thanksgiving. Enjoy the time off with your wonderful families. And last but certainly not least, theta giving. Get those theta numbers up for the weekend. Matt Justice, Tackle Trading. We're out.